Trump's trade war was supposed to make America strong again. Instead, it bankrupted the very farmers who voted for him. So let's get into it. We're going to dive into how a massive, multi-billion-dollar bailout couldn't stop the collapse of America's heartland, and why soybeans, of all things, became the symbol of a promise that was completely broken.
Okay, let's start with just one number, 95%. This number basically tells the whole story. In just the first quarter of 2025, U.S. farm bankruptcies shot up by a jaw-dropping 95% compared to the year before. Now, you got to understand, this wasn't just a bad season for crops. No, this was a shockwave, an earthquake that rattled the entire agricultural world.
And this crisis, it's so much more than just numbers on a spreadsheet. We are talking about the actual collapse of family farms that have been passed down for generations. The end of a way of life for thousands and thousands of people. So, how on earth did we get here? Let's break it down.
All right, to really get a grip on this collapse, you first have to understand just how much was lost. See, before all this started, the United States was the king of soybean exports to China. I mean, the undisputed leader. It was a relationship that everyone thought was totally unshakable.
I mean, just look at how fast everything completely fell apart. In 2017, things were great. Business was booming. Then, boom, April 2018 hits, and suddenly U.S. soybeans have a target on their back. A few months later, the trade war is official. And by 2025, that entire market, gone, vanished. A multi-billion-dollar relationship just dismantled in a few key moves. It's wild.
So, let me ask you this. What happens when the world's largest buyer for your product just disappears overnight? Well, let's dig into the immediate and frankly devastating economic fallout. The sheer scale of this collapse is just breathtaking. In a single year, soybean exports to China dropped by 75%. That's a loss of over 23 million metric tons. Seriously, just try to imagine it. 3/4 of your biggest customer's business gone, just like that. That is exactly what American farmers were suddenly facing. And the USDA actually put a price tag on all that pain. We're talking $9.4 billion. That's the loss U.S. soybean farmers felt in the first year alone. This wasn't some minor dip in the market. This was an absolute catastrophe. And this crisis didn't just stop at the farm gate. Oh no, it rippled out and hit Main Street, and it hit hard. You had industrial giants like John Deere watching their sales just plummet, which of course led to layoffs. At the same time, bankers were reporting that farmers couldn't pay back their loans for 6 quarters in a row. The entire rural economy was feeling this immense strain.
Okay, so here's where the paradox comes in. Because while the U.S. Farm Belt was deep in crisis, other countries were looking at this and seeing a golden opportunity. Because the global market, it doesn't wait for anyone.
See, the whole strategy behind these tariffs was basically a high-stakes poker game. The big assumption was that if the U.S. squeezed a really key part of China's supply chain, soybeans, then China would have no choice but to cave to American trade demands. It was a huge, calculated risk.
But that's not what happened. Not at all. China didn't just fire back with its own tariffs. No, they did something much more permanent. They fundamentally rewired their entire supply chain. They didn't yield. They didn't just retaliate. They replaced the U.S.
So, who did the replacing? Well, say hello to Brazil. While U.S. production was basically flatlining, Brazil saw its chance. They seized the opportunity and massively ramped up their soybean production by 40% just to fill that giant hole that American farmers had left in the market.
And make no mistake, this wasn't some temporary fix. Brazil became China's new go-to supplier. A full 73% of its soybean exports were now heading to China. This cemented a whole new strategic alignment. The U.S. wasn't just pushed to the side for a little while. It was, for all intents and purposes, structurally replaced.
So with a full-blown crisis unfolding in its heartland, what did the U.S. government do? It responded with something pretty unprecedented, a massive financial intervention, a bailout designed really just to stop the bleeding.
We're talking huge numbers here. From 2018 to 2025, more than $23 billion were paid out to farmers. This was all through something called the Market Facilitation Program. And they were even considering another $10 billion on top of that. This was easily one of the biggest agricultural relief efforts in all of American history.
And get this, some academic research actually dug into the numbers and found something pretty startling. The aid money that went to soybean farmers, it actually exceeded the estimated damage from the tariffs by more than $5 billion. So, yeah, the government's response was absolutely enormous.
Okay, so that raises a really critical question, right? If the bailout checks were big enough to cover the immediate financial losses and then some, what was the deeper problem here? What's the thing that all those billions of dollars just couldn't fix?
Well, here's what all that money couldn't buy back. It couldn't buy back the permanent loss of global market share. It couldn't buy back the trust of a major trading partner. And it couldn't restore the value of billions of dollars of infrastructure, silos, ports, railways that were built for a trade route that basically doesn't exist anymore. I mean, Brazil went and signed long-term contracts with China. You just can't write a check to fix that kind of problem.
All right, let's step away from the economics and the geopolitics for a minute, because behind all these numbers, there is a profound and honestly tragic human cost, and it's something we really need to talk about.
The human cost of this crisis is just devastating. Right now, farmers in the U.S. have a suicide rate that is 3.5 times higher than the general population. That makes farming the single highest risk occupation in the entire country. Just let that sink in. What the trade war did was create a perfect storm for a mental health crisis. It just took every single risk factor and cranked it up to 11. You have intense financial stress, a culture where farmers blame themselves for things completely out of their control, and then you add in the deep social isolation that can come with rural life. It was just a truly devastating combination. So, when you take a step back, what are the big takeaways from all this? Well, for one, protectionism can sound really patriotic, but it often ends up hurting your own domestic producers the most. And it shows that global trade isn't some simple tug-of-war. It's more like a complex web. And if you cut one of those strands, the whole system can realign, permanently. And maybe the biggest lesson of all, no nation, not even a superpower, wins a trade war alone. Because in the end, this whole crisis isn't really just a story about tariffs and soybeans. The trade war didn't just shatter export records. For so many of the farmers who actually supported the policy, it shattered their trust. It shattered their hope for the future. And all of this leaves us with one final big question to think about. In these massive global economic battles, are there ever any real winners? Or do we just end up creating new sets of losers?